Hey guys, so I guess we are live today. Let me check if we are. Okay, so today we are gonna talk about Brad Jacobs. This guy has made 7 to 8 billion dollar companies during 5 decades, and he has compounded shareholder capital at an extraordinary rate. So let us um, watch a quick video about Brad Jacobs.
Welcome to this explainer. Today, we're unpacking exactly how a company called QXO is taking the, let's face it, kind of boring building materials sector and turning it into an absolute tech-enabled empire. You know, if you've ever wondered how billionaires quietly roll up these fragmented industries to build just massive wealth, well, buckle up, because we're about to look at a literal masterclass in mergers, acquisitions, and high-tech upgrades. So, here's our roadmap for today. We're going to cover the empire in plain sight, the Brad Jacobs playbook, macro tailwinds and moats, buying and upgrading, and finally, the financial projections. All right, let's jump right into Section 1, the empire in plain sight, distributing the essentials. Now, when you hear about explosive financial growth, your mind probably jumps straight to AI, right? Or cloud computing. You're definitely not thinking about lumber and waterproofing. So, how exactly does a company moving these boring, everyday materials hide such a massive financial upside? Well, the secret sauce here is that this massive scale relies entirely on non-discretionary essential products. We're talking roofing, waterproofing, trusses, the stuff society absolutely needs. QXO is operating in a highly fragmented, $800 billion total addressable market across North America and Europe, and they are not playing small ball. Their stated ambition? To hit $50 billion in annualized revenue within just a decade. That's literally massive. Which brings us to Section 2, the Brad Jacobs Playbook, a history of empire building. To truly understand QXO's future, you have to look at the guy behind the wheel. We're talking about the legendary consolidator, Brad Jacobs. His track record of turning messy, fragmented industries into absolute gold mines for shareholders? It's just historic. He took United Waste Systems to a 55% compound annual growth rate. He built United Rentals into the world's largest equipment rental provider in just 13 months. And XPO Logistics? He skyrocketed their revenue from $175 million to $15 billion in a little over 4 years. Insane. So get this. QXO isn't some random experiment. It's his exact proven blueprint being executed in real time. The formula never really changes. First, you target a huge fragmented industry. Second, acquire the underperforming guys at a great price. Third, integrate everyone onto a single, unified tech platform. And finally, scale aggressively. He's literally just copy-pasting his logistics and waste management playbook directly into building materials. Moving right along to Section 3, macro tailwinds and moats, the perfect storm. Okay, so even the best playbook needs a little wind at its back to really scale. And right now, there is a staggering shortage of 7.2 million new homes needed in the U.S. Think about that. That is a massive, coiled spring of pent-up construction demand, just waiting to snap back into action, especially as interest rates start shifting. And to put things even more into perspective, the median age of a house in the U.S. is over 40 years old. When a house hits 40 decades, stuff just breaks down. Roofs need replacing, windows start to leak. That means repair and remodeling demand is practically locked in. It doesn't even rely on new home buyers. It's just folks needing to maintain the homes they already live in. These unavoidable, everyday macro forces create an incredibly strong defensive moat for QXO. It protects their baseline gross margins, which are standing super durable at 23% plus, totally independent of the broader economy. I mean, when a hurricane hits, fixing your roof isn't exactly a choice, right? Plus, you have this crazy boom in AI data centers being built nationwide, and they require intense amounts of roofing and waterproofing. QXO is perfectly positioned to capture all of that. Let's dig into Section 4,
buying and upgrading, the acquisitions and tech.
Now we are literally watching this playbook unfold right in front of us. Through a rapid-fire sequence of massive deals, QXO blew up their total addressable market to over $300 billion in basically a year. They grabbed Beacon Roofing for $11 billion, then Kodiak Building Partners for $2.25 billion, and now this whopping $17 billion pending deal for TopBuild Corp. In almost no time, they morphed from a shell company into a platform, pulling in over $18 billion in combined revenue.
But honestly, buying the companies is just step one. The real magic? That happens with the tech upgrade. In the legacy building product space, get this, only about 5% of commerce happens online. It's wild. Sales reps are out there relying on manual discounting and pure gut feeling. Well, QXO is ripping out that outdated, tangled mess and replacing it entirely with AI-driven pricing and a completely seamless, unified B2B digital platform.
Jacobs isn't just smashing these companies together and hoping for the best. He's using AI to violently squeeze out the inefficiencies. For instance, management spotted an estimated $200 million in pricing leakage just within the Beacon acquisition alone. By using AI to set strict pricing guardrails and centralizing their massive buying power across all those overlapping top vendors, they're essentially expanding margins on every single transaction. It's a real game changer.
All right, let's bring it all home with Section 5, the financial projections, FCF, DCF, and reverse DCF.
At the end of the day, the true test of this strategy is the cash it generates. As those initial integration costs roll off and these tech synergies really kick in, we're looking at a projected free cash flow explosion. We're talking a scale up from $0.8 billion in 2026 all the way to $1.7 billion by 2030. Right now, standard accounting metrics might look a bit messy because of the hefty acquisition costs, which is why we really have to zero in on free cash flow. That cash is the exact engine they need to pay down debt and go out and buy even more companies.
And you know, when we check out the valuation multiples, QXO actually screens pretty cheap compared to the premium compounders in this space. They're sitting at roughly 11 times forward EV to EBITDA. Meanwhile, a mature competitor like Watsco's trading way up there, closer to 20 times.
So, if we factor in those metrics, along with an 11 times exit multiple on their 2028 projected EBITDA, a standard discounted cash flow valuation spits out an implied target of about $24 a share. Considering the recent trading ranges around 15 or 16 bucks, that represents roughly a 54% upside. Not too shabby, right?
But here is the real aha moment. If we run a reverse discounted cash flow analysis, it shows that the market is severely undervaluing this whole playbook. At the current stock price, the market is basically pricing in the acquisitions, but it is completely ignoring the estimated $300 million in tech-driven margin expansion Jacobs expects to unlock by 2030. They are literally pricing the stock as if the AI and tech upgrades just flat out won't work.
So I want to leave you with this provocative thought. If the current price assumes Brad Jacobs fails to execute his proven blueprint, what on earth happens to the valuation when he inevitably does? Sure, QXO is highly leveraged, and yeah, it requires flawless execution. But if you trust those massive macro tailwinds in housing, and you look at this billionaire's undeniable track record, the math points to a massive, untapped upside. Thanks so much for tuning into this explainer, and definitely keep your eyes peeled on how this blueprint unfolds.